Welcome to our deep dive on the Roth IRA trap that catches many high earners. In this video, we will explain why a 6% annual penalty can quietly drain your returns if you contribute directly to a Roth IRA after crossing income limits. We will then show how to correct past mistakes and stop the recurring penalty using Form 5329. And finally, we will walk through the Backdoor Roth IRA method to future-proof your tax-free retirement growth. Let us begin. First, let us set the stage. Roth IRAs offer tax-free growth and tax-free withdrawals in retirement, which makes them highly desirable. However, if your adjusted gross income exceeds the IRS thresholds for your filing status, any direct contribution to a Roth IRA becomes an excess contribution. That excess triggers a 6% excise tax each year until it is corrected. In this video, we will explain how the penalty works, how to correct it properly, and how to avoid the problem altogether going forward using the Backdoor Roth IRA approach. Next, here is our agenda. We will start by clarifying income limits and how excess contributions happen. Then we will detail the 6% penalty and its recurring nature. After that, we will show the exact steps to fix past mistakes with Form 5329. We will then cover the Backdoor Roth IRA method and important pitfalls such as deadlines and the Pro-Rata rule. Finally, we will reinforce learning with a couple of short quizzes. Before we proceed, an important disclaimer. This material is for educational purposes only. It is not tax, legal, or investment advice. Your situation may be unique, and tax rules change. Please consult a qualified tax professional or financial advisor before taking action. Now, let us identify who is at risk. If your adjusted gross income exceeds the IRS Roth IRA limits for your filing status, any direct Roth IRA contribution becomes an excess contribution. This commonly happens when people receive bonuses, stock vesting, or a new job increases income mid-year. It also happens when someone assumes last year's eligibility applies to the current year. Because both income and IRS limits change each year, you must verify eligibility annually. Let us define the problem. An excess contribution occurs when you directly contribute to a Roth IRA for a year in which you are not eligible due to income limitations. The consequence is a 6% excise tax on the excess amount, assessed every year until the excess is removed or absorbed by future contribution room. If you miss the original withdrawal or recharacterization deadline, the penalty for that year is permanent. However, you can still stop the penalty from continuing by applying the excess to the next year's available contribution limit and documenting the correction with IRS Form 5329. Here is the correction flow. If you discover the excess contribution before the tax filing deadline for that year, you can request a return of the excess and its associated earnings from your custodian, which typically eliminates the 6% penalty for that year. If you discover it after the deadline, you calculate the remaining excess by year and determine if you have unused contribution room in the current year. If you do, you redesignate the prior excess as a contribution to the current year with your custodian, and then file Form 5329 with your current year tax return. You will still owe the locked-in 6% penalties for past years, but crucially, the recurring penalty stops going forward once the excess is fully absorbed and documented. If you do not have current year room, the 6% continues until you can absorb it in a later year, so you should create a plan and track it carefully. Let us quantify the penalty. The excise tax is 6% of the remaining excess amount as of each year end. For example, if you have a $6,000 excess, the penalty is $360 for each year that the excess remains uncorrected. Paying the prior year penalty does not stop future penalties. Only correcting the excess stops future penalties. Filing Form 5329 with your current year return documents both the prior excess and how you have applied it to current year contribution room, thereby stopping the recurring charge once the excess is fully absorbed. This timeline shows how the penalty repeats annually. In the first year, the excess is created. In the second and third years, the 6% excise tax applies again because the excess remains. In the correction year, you apply the excess to the current year contribution space and file Form 5329, which stops the penalty after the excess is fully absorbed. From the next year onward, there is no further 6% penalty as long as no excess remains. Moving from theory to action, Here is how to stop the recurring penalty. First, calculate your remaining excess by year and dollar amounts. Second, verify how much of your current year Roth IRA contribution limit is still available. Third, contact your IRA custodian to apply prior year excess to your current year contribution space and to document that designation in the account records. Fourth, file IRS Form 5329 with your current year tax return to report the prior excess, the carry forward, and the correction. Fifth, pay any locked-in penalties for the years the excess existed. Sixth, continue tracking until the entire excess is absorbed. If you have not filed Form 5329 in previous years, you should file it now and possibly amend returns as needed. Consult a tax professional if you are unsure. Form 5329 is the official mechanism to report the excise tax, carry forward of excess contributions, and the correction using current year contribution room. You file it with your current year return and include any prior year penalties that were already locked in. Maintain documentation from your custodian confirming how much prior excess was applied to the current year, and keep year-end statements. If you never filed Form 5329 for earlier years, file it now and consult a tax professional regarding whether amendments are required. Let us compare two approaches. A direct Roth IRA contribution is straightforward when you are under the income limits, but it becomes risky if your income spikes mid-year, causing an excess. In contrast, the Backdoor Roth IRA method allows high earners to add new funds to a Roth regardless of income. It involves contributing after-tax dollars to a traditional IRA and then converting to a Roth. However, the Pro-Rata rule can create unexpected taxable income if you hold pre-tax IRA balances, and you must report the non-deductible contribution in conversion on Form 8606. Here are the Backdoor Roth steps. First, ensure you have a traditional IRA and, ideally, no pre-tax IRA balances to avoid the Pro-Rata rules. Second, make a non-deductible contribution up to the annual limit. Third, convert that contribution to your Roth IRA, often soon after the contribution. Fourth, avoid tax withholding on the conversion so the full contribution moves into the Roth. Fifth, file Form 8606 to document your basis and the conversion. Sixth, if you do have pre-tax IRA balances, consider moving them to an employer plan, such as a 401k, to mitigate the pro-rata impact before executing the backdoor process. Before you implement a backdoor Roth, understand the pro-rata rule. The IRS aggregates all of your traditional, SEP, and simple IRAs when calculating the taxable portion of a Roth conversion. If you have any pre-tax balances, part of your conversion will be taxable. A common mitigation is to roll those pre-tax IRA funds into an active employer plan, such as a 401k, before performing the backdoor Roth. Regardless, you must file Form 8606 to record your basis and report the conversion. To solidify the concept, here is a Markdown-style example. You contributed $6,000 while over the income limit. You missed the original deadline to remove the excess, so you owe 6% for each year the excess existed. In the current year, you still have $6,000 of contribution space. You apply the prior excess to this year and file Form 5329. Past penalties are still due, but you stop the penalty from recurring because the excess no longer exists going forward. Maintain documentation from your custodian and preserve copies of Form 5329 for your records. Quiz time. What actually stops the 6% annual Roth excess penalty from continuing? Option A, paying last year's penalty once. Option B, waiting for the IRS to autocorrect it. Option C, using current year contribution room to absorb the excess and filing Form 5329. Option D, closing the Roth IRA account. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is using current year contribution room to absorb the excess and filing Form 5329. Paying a prior year penalty does not stop future penalties, and the IRS will not autocorrect it. Closing the Roth IRA does not retroactively resolve the excess. Second quiz. True or false? High earners can always contribute directly to a Roth IRA regardless of AGI. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is false. Direct Roth IRA contributions are subject to income limits. High earners typically use the Backdoor Roth IRA to contribute indirectly. Here are the key takeaways. Excess Roth contributions trigger a 6% penalty each year until corrected. Past year penalties are locked in, but you can stop future penalties by correcting now. Use current year contribution room and file Form 5329 to end the cycle. For high earners, the Backdoor Roth IRA is a standard and legal method to fund a Roth. Finally, be cautious of the Pro-Rata rule and maintain complete documentation. In summary, income limits make direct Roth IRA contributions risky for high earners. An excess contribution creates a penalty that repeats annually until the excess is absorbed and documented. Form 5329 is the tool to correct past mistakes and stop the penalty from recurring. Going forward, protect your strategy by using the Backdoor Roth IRA and by planning around the Pro-Rata rule. Before you go, if this video helped you avoid the 6% trap, please like, share, and subscribe. In the comments, tell us your biggest Roth IRA question or where you are in the correction process. Your questions may inspire our next deep dive.